So good afternoon. Yesterday we have discussed in the block 1 2 units, that is introduction part, basic concepts, and also income exempt from tax. Now we move to the unit 3, that is income from salary, and also we try to complete income from house property. So first let us look about the income from salary. Normally salary means is an assumption that whatever the income they receive, that is salary. But actually salary includes different points that has to be taken into consideration whenever we do that chapter. So here income from salary means there should be a relation between employer and employee. Relation should exist between two people. Then whatever they receive, that is called income from salary. If there is no existence of employer and employee relation, then it is not a salary. It will fall under income from other sources. Such as if you can just look at here. If an employee does not work or does any work for his employer which is not connected with his service, then the remuneration for which working is treated as that will be not treated as salary. For example, examiner's remuneration received by teacher by correcting the evaluation or some other thing, that will come under income from other sources. It won't be a income from salary. Why? Because there should be a relation between employer and employee. And salary may be either in the cash form or it may be in the kind form. And salary of a member of parliament, this will not become the salary because a member of parliament is not a government employee. The same shall be taxable under the head income from other sources. So these are the different features where we define or we will try to categorize what salary means. So here salary, if you can just look at here. Under this we have, you can just look at here, salary. We have from section 15 to section 17 where it has been discussed about the salary. Under the chargeability of salary, deductions allowed out of salary income, and allowances that are includable in salary, perquisites, and profits in lieu. So just better not concentrate on this. Let's see how actually salary will be calculated and how it is to be taken as salary. If you just look at here, we have 4 points that has to be kept in mind. The first one is basic salary, allowances, perquisites, and profits in lieu of salary. So now we will try to understand what all will fall under basic salary, what will come under allowances, and what are the different terms or provision that will fall under perquisites and profits in lieu of salary. So this 4, when we add these 4 things together, we call it as salary. So under that, first one is basic salary, allowances, perquisites, profits in lieu of salary. When you add these 4 heads, whatever total we get, that is called as gross salary. We call it as gross salary. So from this gross salary, if we deduct the deductions, we have 3 deductions. Deductions under section 16, we have 3 deductions. That is standard deduction. Standard deduction, every employee will get a flat deduction of 50,000. Irrespective of the income they are getting, whatever the gross salary they get, from that they'll get a deduction of standard deduction of rupees 50,000. This is standard deduction, that is section 16, subsection 1. Next one is entertainment allowance, and this allowance is given as deduction only for the government employees. So entertainment allowance, that is section 16, subsection 2. This deduction is allowed only to the government employees. The next comes the last deduction, that is section 16, subsection 3. That is employment tax, or it is also called as professional tax. Employment tax, or it is also called as professional tax. So these 3 are the deductions. If you deduct these 3 deductions from the gross salary, we'll get income from salary. Now let us understand, okay, this we have understood, this is the format. Now what all the things that will fall under basic salary, let us look at the format. We just look at here, under salary, basic salary, bonus, commission, fees, overtime remuneration, leave encashment, employer's contribution to RPF in exercise prescribed limit, interest credited to RPF in excess of prescribed limit. So under salary, Here salary means not only the term whatever we call it as salary, but it is inclusion of different points. If you look at under this, we have salary means basic salary. Means normally it is also called as pay scale, we call it as. Pay scale or basic salary. For example, if you see any like PSUs or any organized or aided or government organizations, there will be pay scale. For example, whenever you see an advertisement in the newspaper, it will be shown like this: 5,200 to 20,000. So this is called pay scale, means the employee salary will start from 5,200 and it will stop at 20,000. Then what is after that? After that, they will have a new pay scales. So that is called basic salary. Normally, we can assume it as pay scale or basic salaries. Next, we have bonus. As you know, whenever you do an extra, like normally if any employee working in any business, they'll get Diwali bonus. Or if you're working for an extra work or you're achieving something, bonus will be given to you. Commission, fees, overtime remuneration. So these all together we call it as salary. But under this, we have two important points. That is employer contribution to RPF in excess of prescribed limit. So RPF means nothing but recognized provident fund. So if employer, whatever employer is contributing towards employee, that is recognized provident fund, if it is any excess of prescribed limit, then what is the prescribed limit here? We should know that if anything paid extra more than 12%, if employer is paying more than 12%, the extra amount is taxable. For example, till 12% is exempted. If they are paying 14%, the extra 2% will be taxed over here. That will be taken for the calculation of tax liability. Then what is the interest? Whatever contribution is done by the employer towards RPF, that is recognized provident fund, on that whatever interest is coming, and that interest if is exceeding the prescribed limit, then what is the prescribed limit again? The interest should not be more than 9.5%. It should be only 9.5%. If they're getting more than 9.5%, then how? If it is more than 9.5, it is 12%. The extra percent of amount will be taxed, and that will be added here for the calculation of income from salary. So salary include these all things. Now comes the second head, that is allowances. Allowances means anything paid extra in the form of cash apart from the basic salary. Apart from the basic salary, that are called allowances. Again, allowances are of three types: fully taxable allowances, partly taxable allowances, and allowances not taxable. So whenever we are calling it as fully taxable allowances, means if these type of allowances are provided to the employee by the employer, they are fully taxable. Then how to know which are the fully taxable and which are not the taxable allowances? So here we have just, you can just review here. So these are the fully taxable allowances. These are fully taxable allowance, that is dearness allowance or dearness pay, city compensatory allowance, entertainment allowance, fixed medical allowance, tiffin or lunch allowance, non-practicing allowance, project allowance, deputation allowance, family allowance. So these are the, if these things are being provided by the employer to the employee, then these all will be taxable. These all are fully taxable, irrespective of whatever amount they are receiving. For example, dearness allowance, we are receiving 1,000 per month, so yearly 12,000 is taxable. And only the thing is entertainment allowance. This is allowed as deduction only for government employees. Remaining all employees, it will be taxable. So now we'll move to the next one, partly taxable allowances. So what are these partly taxable? If you look at here format, first one is allowances fully taxable. Next comes partly taxable. Means these allowances are provided to the employee when they are in service or doing the fulfilling the duty. In that case, that will be partly taxable. So how much it is taxable? Means under that the first one comes as HRA, house rent allowance. The first partly taxable allowance is house rent allowance. And this allowance is provided by the employer to the employee, but it is not fully taxable. That is the reason we are calling it as allowances partly taxable. Means it is neither fully taxable nor fully exempt. So how much is exempt and how much is taxable means we have certain provisions. We have certain, for example, if any employee is receiving an HRA like 2,000 per month, so yearly it will be 24,000. This is actual HRA received by an employee from the employer, house rent allowance. And whenever they are receiving this, neither it is fully taxable nor it is fully exempt. So how much is exempt means under that we have three provisions. These are the three rules. Out of these three, whichever is least, out of these three provisions, whichever is least, that is given as exempted. That is given as exemption. So how much it is? Actual amount of HRA received. So how much we are receiving? 24,000. And second provision is 40% of salary or 50% of salary. 40% means where we have to calculate. 50% is applicable only to the metropolitan city employees. Metropolitan cities means we have Mumbai, Chennai, Kolkata and Delhi. This, apart from these four cities, only in these four cities, there will be 50% of tax, that is, it is 50% of salary is taken. Apart from these four metropolitan cities, remaining all cities, it will be 40% of salary. So what is salary? Here we are calling 40% of salary or 50% of salary. Then what is salary for the calculation of HRA? Why? Because for each allowance or each perquisite, whenever we call 10% of salary, 40% of salary, salary means we have different meaning. So here salary, that is nothing but, you can just look at here. Salary means basic pay plus DA. In the brackets, it is mentioned as service benefits. Basic pay plus DA in the brackets as service benefits plus commission calculated on total turnover.
Okay.
So if you look at here, 40% of salary and 50% of salary. Salary means basic pay plus DA. And DA also, when can we take? Only if it is mentioned that it is part of our service benefit, or if it is a part of salary, or it is a retirement benefit. If it is mentioned like that, only in that situation we will take DA. Otherwise, if it is given only as DA, we will not take. And commission calculated on turnover. If they have mentioned commission on turnover, then it will be added. So that is the salary here. 40% of salary means we will calculate like this. Then we will do the 40% of salary. And 50% in case of these metropolitan cities. The next comes the third point, that is rent paid by the employee minus 10% of salary. For example, an employee is paying every year, every month 1,000 rent. So 12 months it will be 12,000. So rent paid by employees 12,000. Less we are calling now, less means minus 10% of salary. Again, what is salary? The same rule is applicable. That is basic pay plus DA plus commission on turnover. For example, in the question they have given like this. Basic pay is 10,000. Basic pay is 10,000. And DA is part of salary, that is 2,000. And there is no commission mentioned. So I'll take only salary here means 12,000. Salary would be 12,000. So now what I'll do, actual HRI I received is 24,000. And if I'm living in Hyderabad, 40% of salary because it's not a metropolitan city. So 12,000 here, it will be 12,000 into 40%. So it will be 4,800. It will be 4,800. So here 40% of salary will be 4,800. And the third point is rent paid by the employee is 12,000 minus 10% of salary will be 1,200. So it will be 11,000, sorry, 10,800. So now out of these 3 points, first one is 24,000, second one is 4,800, and third one is 10,800. Out of these three, whichever is the least one is 4,800. This will be deducted from actual HRA received. So actual HRA, what we have received? 24,000. We are neither exempting total 24,000, nor total 24,000 is taxable. So how much is exempted? 4,800. This will be exempted, and remaining 19,200 is taxable. So this will be written over like this here. I'll show where it will be written like this. Yeah. Can you look at here in the format? Partly taxable allowances, HRA, less deductible. Now, how much is deductible? 4,800. Remaining 19,200 will be written in the last amount column. Is it clear? So we will move to the next one, that is allowance.
Hello.
Yeah. Sorry. There is a little disturbance over here. So here, this is one of the partly taxable allowances. Now we move to the next one. So like this, we have various number of partly taxable allowances. Under that, first the most important one is house rent allowance. So this would be taken for the calculation. Next, we have prescribed special allowances. Prescribed special allowances means these allowances are provided to the employee for fulfilling the official duties. So in that case, how much it is to be taxable and how much it is not taxable means it is taxable to the extent of the amount unspent. For example, to any employee, traveling allowance is given as 5,000. So how much is exempt? For example, that employee has utilized 3,000 rupees. In that case, 3,000 is exempt. How much is unspent? 2,000 is unspent. That will be exempted from the tax. For example, how traveling allowance is 5,000 given to an employee, and employee has spent 3,000. So whatever amount is spent, that is exempted. Whatever amount is unspent, that is taxable. So 5,000 minus 3, it comes to 2,000. So 2,000 is taxable. Like this, these are the few allowances which are taxable when they are.
How much amount exempt, madam?
No, it is not like that. It is not like there is no exemption for these allowances. For these allowances, whatever amount is spent. For example, I have received 5,000 as traveling allowance. If I have spent total 5,000, total is exempt. There is no taxable amount.
Okay.
Only for unspent amount, it is taxable.
This
only
is the A to G unspent amount only.
I didn't understand.
Okay. This is the traveling unspent amount only taxable, madam.
Yeah, unspent amount only taxable. If it is, for example, instead of this 3,000, if I have spent total 5,000, then in that case, total 5,000 will be given as exemption. Total 5,000 will be given as an exemption. So I'll write here total 5,000. So nothing is taxable. It will be nil. There is no taxable amount for this type of allowances. So what are those? Traveling allowance, conveyance allowance, daily allowance while on tour, helper allowance, academic allowance, uniform allowance, and newspaper allowance. So these are the few allowances. If these allowances are given, only unspent amount is taxable, remaining amount is exempted. Whatever is spent, that is exempted. So next we have a special allowance to meet the personal expenses. So they are, you can just look at here, special allowances to meet the personal expenses. Means, for example, sometimes employer will give children education allowance, children uniform allowance, children hostel allowance, transport allowance. So here it is neither unspent nor partly. For example, if you just look at here, for children education allowance, it is 100 per month. How much is exempt? For example, if the employer is giving them, yeah, if employer is giving 5,000 to me, 5,000 towards children education allowance. In that case, how much is unspent then? It's not like that. Here, 100 per month for 2 children. If an employee is having 4 children, so it is not like 4 into 100 into 12. No, only to the extent of maximum of 2 children it is exempted. It means if the children, it is 5,000 education, that is children education allowance is received from the employer, then I will be getting a deduction of 100 per month into 2 children into 12 months. So I will get an exemption of 2,400. So remaining is taxable. Like this, for this type of allowances, only these amounts are the exempted amounts. Remaining would be taxable. Even for the children hostel allowance, that too only for the maximum of 2 children. And exempted amount is 300 per month. Same for travel allowance, underground allowance, compensatory field area allowance. So like this, we have various different allowances. If these allowances are given by the employer, in that case, only the amount exempted that is mentioned according to the rule that will be exempted, remaining will be taxable. So next, the third one is allowances not taxable. Under this, we have only 3 points to be remembered. That is, any foreign allowance received by the, like who are working in, like ambassadors for our country. They're working for our country, but in different country. So they will be given as foreign allowance. These are fully exempt. And sumptuary allowance to High Court and Supreme Court judges, that is also exempted. Allowances from UNO, that is to employees, to its employees, and that employees an Indian, then it is also fully exempt. So these three are fully exempt allowances. So as we have discussed in this format, allowances are of 3 types. Fully taxable allowances, which has been mentioned 14 to 20 they are. And partly taxable allowances, HRA especially. Why? In partly also again we have 3 categories. In partly also we have 3 categories. That is allowances partly taxable. The first one is HRA. That is related to the provision given. We'll be calculating. Next one is prescribed special allowance. If these allowances are given, they are exempt to the amount of spent amount, and unspent amount is taxable. And the third one is as special allowances to meet the personal expenses. These are exempt only to the limit that has been mentioned. So this is about partly taxable allowances. And allowances fully taxable, fully exempt. These are the 3 things that are exempt. Then comes the third head, that is perquisites. Perquisites means any cash or kind, mostly it will be kind, or any emoluments that are been attached to the profit for the individual benefit. Apart from the salary, if it is provided to the employee, then it is called perquisites, means personal benefit. Perquisites means nothing but the personal. Earlier it is to call as fringe benefits. So it is personal benefit. Under that, we have different types of benefits, which are taxable in case of specified employees, taxable in case of all employees, and tax-free perquisites. So here also we have 3 types of perquisites. They are tax-free, fully tax, and taxable in case of all employees, and taxable in case of specified employees. So let us understand where there, if this type of perquisite is provided to the employee, it is taxable to all employees. Under that, the first one is rent-free accommodation. Means if there is any accommodation is provided to the employee, in that case.
Yes, ma'am.
Yeah, no, just a minute. Yeah, sorry. Yeah, I'm audible?
Yes, audible.
Yeah. So under that, the first one is rent-free accommodation. Under rent-free accommodation, any accommodation provided by the employer to the employee. In that case, means normally this type of will be provided to the managers and any government high officials like bureaucrats, we can call like IAS and IPS, where the accommodation is provided to the employee without charging anything. So, or at concessional rate, then that is called rent-free accommodation. Under that, we have government employees, non-government employees. Means if rent-free accommodation is provided to the government employees, how it is taxable. And if it is provided to the non-government employees, then how it should be treated. If any rent-free accommodation is provided to the employee by the employer, and if he's a government employee, whatever the government is charging, that will be taken as amount that is taxable. There is no prescribed amount, only this amount will be charged. No, it's not like that. Whatever the government has decided, that rent will be fixed by the government, will be taken for the calculation of tax. For example, along with any accommodation, fully furnished furniture is also provided in that house, like fully furnished cupboards and all extra furniture is provided. That is called rent-free fully furnished accommodation. It is called as RFFA, we call RFFA, rent-free fully furnished accommodation. Means accommodation is provided along with the furniture. For example, an X is a government employee, or if you want, you can just look at here. They have given even illustration. Otherwise, I'll just explain. For example, if an employee is provided an accommodation, rent-free accommodation for 60,000, worth is 60,000. So this is a value fixed by the government. This is only for government employees, 60,000. And furniture is also provided. In that case, we will take 10% of cost of furniture. 10% of cost of furniture or any rent paid by the government. That will be added. 10% of, for example, furniture is 10,000. 10,000 of 10% will comes to 1,000. So furniture value will be added as 1,000. So now rent-free fully furnished accommodation is 61,000. How I got 60,000? This is given by the fixed by the government itself. So for any government employee, rent-free fully furnished accommodation is calculated when rent given by the government plus 10% of furniture or higher charges paid by the government. That is rent-free fully furnished accommodation. Next comes other employees. Other employee means who are not government employees. So how it should be treated? For this, we have separate provision. For other than government employees, we have separate provision, that is, if it is an unfurnished accommodation, means there is no furniture is provided in that house. In that case, if a city having population exceeding 25 lakhs, then 15% of salary will be taken as rent-free accommodation. If city is having exceeding 10 lakhs but not exceeding 25 lakhs of population, then 10% of salary will be taken. And if city is having population less than 10 lakhs, then we'll take 7.5% of salary. Why we are calling 25 lakhs, 10 lakhs and 10 less than 10 lakhs? Because if you take city like Hyderabad, the population would be more than 25 lakhs.
2 crore.
In that case, we will take 15% of salary for calculating rent-free accommodation amount. Because they'll not give directly us amount how to write it in the direct statement. They will give only that they stay in Hyderabad, means you should know that, okay, their population is more than 25 lakhs. Whenever the population is 25 lakhs more than, we will go for 15% of salary. For example, the employee is staying in Nalgonda town, means where their population may be less than the 10 lakhs. So when he is staying in Nalgonda, so it will go for 7.5% of salary. For example, if you take Warangal, it may be more than 10 lakhs, but maybe less than 25 lakhs. But less than 25 lakhs. In that case, I'll go for 10% of salary. Then what is salary? I'm telling salary, 10% of salary, 15% of salary and 7.5%. Here salary. Salary means basic pay plus DA plus all taxable allowances. You can just look at here. Salary means basic pay plus DA. That too only DA will be taken when it is mentioned in the question that DA is a part of salary, or DA is a part of service benefits, or DA is a part of retirement benefits. In that case only DA will be taken, plus commission, plus bonus, plus fees, plus all other taxable allowances. Which allowances we will take? all taxable
All
allowances.
taxable allowances.
Taxable allowances. So this all will be added together and that is called as salary. So here I was telling now 15% of salary. So salary means we will calculate. They'll not mention in the question directly. They'll give us. We have to add all those things. And on that, we will calculate 15% of salary depending on the population of that city.
Yes.
That is rent-free accommodation when accommodation is owned by employer. For example, here X is a employee and Z is a employer. Means he is providing employment to employee. Here Z is giving rent-free accommodation to the X. But whatever accommodation is provided by the Z is owned by himself. Means he has given one room, one flat to the X. That flat belongs to the Z. Z means that company or that organization. In that case only this rule is applicable. And if any furniture is provided, we will add 10% of furniture or actual hire charges. But when accommodation is not owned by employer, the first situation is what? Whatever flat is given to X, that is owned by the company or organization. Now the second situation is the flat, whatever given to X is not owned by employer. Here Z is taken that flat on rent basis and given to X. That does not belong to the Z. It belongs to the X. So in that case, how to calculate? Here, actual amount of rent or lease paid by the employer. Rent is taking now on based of rent, he has given the house to the X. So in that case, whatever rent is paid by the employer, that is Z. Z is paying. For example, Z is paying a rent of 60,000. Here X will not pay. Z only will pay because employer is providing the. So whatever rent is paid by the Z to the flat given to the X, that is 60,000 or 15% of salary. Or 15% of salary. Salary means just now we have discussed basic pay plus DA plus bonus plus commission plus fee plus all other taxable allowances. Yeah. Now on that 15%. Out of these two, whichever is less. Either 60%, whatever rent paid by the employer or 15%. Out of these two, whichever is less, that will be taken as rent-free accommodation when the house is not owned by the employer. And to this, we will add 10% of cost of furniture. This is for rent-free accommodation where you have three situations. The first one is government employee. Whenever government employee, rent fixed by the government itself plus 10% of furniture. Second one is other employees. Under that, two situations. The first one is where accommodation is owned by the employer. If it is owned by the employer, we will go along with the city of population. If it is 25 lakhs, more than 25 lakhs of population, we will go for 15% of salary. And if it is 10 lakhs, but less than 25 lakhs, we will go for 10% of salary. And if the population is less than 10 lakhs, we will go for 7.5% of salary. Yeah. And if it is accommodation provided by employer to the employee is rented or hired, in that case, 15% of salary or actual rent paid by the employer. Whichever is less, that will be taken as rent-free accommodation. And all these three situations, if furniture is provided, 10% of furniture, cost of furniture or higher charges will be paid, added to that, and that will become rent-free furnished accommodation. So in that, we'll move to the next one. That were two situations. Now, for example, either I'm not having own accommodation, nor I have rented accommodation providing to the employee, but I have provided accommodation in a hotel. Then what is the situation? How to calculate? In that case, whenever we are transferring from one place to another place, immediately I may not get the accommodation facilities, or the organization may not have that accommodation facilities, or they may require some time to even provide on the rent basis also. In that case, the period of stay should not exceed 15 days.
Okay.
Then if it is not exceeding 15 days in the hotel, if they're staying, in that case, that is taxable. It will be, it is fully exempted. There is no tax. It will become nil. If it is exceeding 15 days, then what is the situation? Till 15 days, it is nil. There is no taxable amount on that. If it is exceeding 15 days, then it will be 24% of salary will be taxed. For example, annex is provided hotel accommodation for 30 days. Then what to do? How it is taxable? We will write 24% of salary. Salary means again all those provision is there now.
Yes,
On that
yes,
we will tell
yes.
the 24% and that is taxable. Or whatever expenditure incurred. For example, for 30 days it was 1 lakh rupees in a very good hotel. It was 1 lakh rupees.
Yes.
For 30 days it is 1 lakh rupees. Or 24% of salary. Out of these two, whichever is less. 1 lakh rupees, whatever the amount spent, or 20% or 24% of salary is 2 lakhs, for example. So out of these two, whichever is least, 1 lakh, that is exempt. Remaining will be taxable. Out of 2 lakhs minus 1 lakh, remaining 1 lakh will be taxable.
Taxable
and remaining
amount.
exempted. Yeah. So this is how we'll go through all those things. Next, apart from this, we have the most important one is interest-free or concessional loans. Sometimes we take loan from the employer. Either for medical requirement or any other requirement, we take loan from the employer. In that case, if the loan amount is not exceeding 20,000, means less than 20,000 or 20,000 only. In that case, there is no taxable. It is not taxable at all. It is not at all taxable. If any amount is exceeding 20,000, then it comes under taxable amount. Same even you are taking any loan for the medical treatment, it is exempted. Irrespective of the amount of loan, the value shall be nil. But if you are taking any reimbursement from insurance company, then it is taxable. So these are the few things. And again, they mention what actually should be treated. And the next one is use of movable assets like furniture, computer. If your owner, means employer is giving you, providing you only specific, it is for individual person only. If he's providing any furniture to you specifically or any computer, then how to tax it? Either it is not exempted or nor it is taxable. It is to some extent it is taxable. So what extent? If the asset is owned by the employer, for example, I am the employer, I am giving a computer to my employee. In that case, 10% of the cost of the asset is taxable.
Per annum.
10%, yeah, per annum or to period, whatever it is taken. And that too more than 10 years. It should be, if we using that laptop or system for more than 10 years, then it shall not be treated as perquisite. It is fully taxable then.
Okay.
Next, that is owned. If I'm having my own system and I'm giving to my employee, rather than that, I want to provide furniture to my employee, but I don't have my own furniture. I am taking on rent basis that furniture and I'm providing to my employee. In that case, whatever rent I am paying, that shall be taxable by the, it is taxable to the employee. Z is an employer, X is an employee. So Z, what is doing? He want to give furniture to his employee. But Z do not have his own furniture. What is doing? He's getting it from outside on the rent basis and giving to employee. And who is paying that rent? Z is paying. In that case, it is fully taxable. Okay. The next comes motor car. Normally, we see this will be provided to the IAS and IPS are highly bureaucratic people. And if you go for any company form of organizations, MDs, directors of that company will be provided this facility, motor car. So again, under motor car, if the car is owned by the employee and the car is used wholly for business purpose only or the organization purpose only, or car is used both for private purpose as well as for official purpose. So like this, we have different criteria and how to use it. And even car, we will have different types of models of car. But taxation purpose, the car has been divided into two types. That is small and large car. Means based on the CC of that particular car, it has been divided into small and large car. So first, let us see different situations, how it can be treated. If we just look at here, where car is owned by the employee. Employee himself is having. and he is meeting all the expenses by himself, then it is not a perquisite. Why? Because it is my own car and I am only using it and I am only paying all the expenses. In that case, it is not a perquisite. Perquisite will become when it is provided by my employer, my owner of that organization.
Yes.
So if I am having and I am only meeting, then it is not a perquisite. That is the reason. If you can just look at here, it is not perquisite and it is not taxable also. But when maintenance and this also. Next one, if the car is used wholly for official purpose, for what purpose? For office only I am using. In that case also it is not taxable because I am not using for my own purpose. If the car is wholly used for private purpose, then it is fully taxable. The owner has given that car to you, but you are using only for your private thing. Then it will become a perquisite and it is taxable. The next comes, if the car is partly used for official purpose and partly for private purpose. You are using for both, as well as for office, as well as for a private things. In that case, we have different steps. If you can just look at here. Step 1, find out actual expenditure incurred by the employer, less amount used for official purpose. And it will be 1800 per month. This you have to remember. There is no other option. 1800 per month. I said na 2 types of cars will be there. Small and large. Small car means where CC is not exceeding 1.6 liters. That is called small car.
Okay.
And if it is exceeding 1.6 liter CC, then it will be a big car.
Large
so
car.
in that case, again rule also changes. If the car is less than 1.6 CC, it will be 1800 per month.
Okay.
If it is exceeding 1.6,
providing this benefit.
No, up to this it is taxable.
Okay.
Because it's a perquisite now provided by employer.
Okay, ma'am.
So if you just look at here, calculated at the rate of 1800 per month, where the cubic capacity does not exceed 1.6 liter CC. If it is exceeding 1.6 liter CC, 2400 per month is taxable.
Okay.
And if driver is provided along with that. If driver is also, because I don't know driving. So even the
driver salary who will pay, ma'am?
The organization only will pay, employer. You can just look at here.
Okay.
Here the heading. When maintenance and running expenses are met or reimbursed by the employer.
Okay.
Employer is paying this.
Okay, ma'am.
So in that case. So this all will be paid by the organization only. So that is the reason it is taxable.
Okay.
So if it is 1.6 less than 1800 and if it is more than 1.6, 2400. And if this driver is also provided, whichever car it is, 900 per month will be charged. Less if any amount recovered from employer. For example, this all is provided by whom? Employer is providing. Suppose Z thought instead of giving these all facilities to him, not collecting everything, at least 500 per month. If he is collecting any amount such that will be exempted. Okay. Less amount recovered from employee. So remaining will be taxable. That is when he's having own car, but expenses are met by whom? Employer.
Employer.
First situation is where car is owned by employee. Under that, all expenses are met by employee. It is not a perquisite. Yes.
No, ma'am. Carry on.
So here where car is owned by the employee is having his own car. Under the 2 situations where employee is incurring all expenses, it's not a perquisite and it is not taxable. Here, same car is owned by the employee, but expenses are paid by whom? Employer is paying. In that case, this rule is applicable. Now, the car is provided by the employer itself. When car is owned or hired by employer, the second situation. And if all expenses are reimbursed by employer, or if the car is used for official purpose, it is not a perquisite. Because for office only as given and is using for office only, then it is not taxable and it is not a perquisite at all. But he is using total for his own private purpose. In that case, whatever expenditure employer is paying, that is taxable. But if he is using partly for official and partly for private purpose, again the same rule that is applicable, 1800 per month and 2400 per month, depending on the CC, and 900 per month. Next comes where maintenance charges are met by employee. Official purpose, it's not a perquisite. If it is private purpose, he will collect from the employer. So this is how the car is treated. This is all you have to memorize it. Next comes tax-free perquisites. Means if you are getting this type of perquisites, they are not taxable, and they are taxable only in case of employees. The following perquisites are tax-free in case of employees. Means they are not taxable. Under that, medical facilities. If any medical facilities is provided by the employer, it is fully exempt, or any recognized hospital it is provided. We have some hospitals that are recognized, then only it is exempt. And if you are getting any reimbursement or any medical insurance, that is also exempt, fully exempt. And medical treatment outside India, if you are getting for travel also, you'll get an exemption. So these all are tax-free perquisites. If you get this type of perquisites, they are not taxable. Under that, you have rent-free house provided at remote area, like agency area, like northeastern states where it will be very less infrastructure facilities, or free meals provided at remote place, free recreation facilities to employees, free refreshments to the employees during office hours, telephone bills, mobile phones paid by the employer. So these all are tax-free perquisites. If these things are provided to the employee, they are not taxable, they are fully exempt. Laptops and computers provided for personal use, interest-free loans, an amount exceeding 20. So these are different things. Means if any interest-free loans we said, now it is taxable, but how much? If it is not exceeding 20,000. Yeah. And if an employer is giving any gift to employees in the form of kind, not in cash, in that case, till 5,000 it is exempt. Yeah. And even free meals are provided at the office. For example, each meal rate is 100 rupees. Till 50 rupees it is exempt. Remaining 50 is taxable. So these are the different rules. We have to memorize the perquisites. Next, we have profits in lieu of salary. Profits in lieu of salary means whatever salary you are receiving instead of salary. For example, compensation for loss of employment. Nowadays, we could hear suddenly removing by, I don't want to take any company names, removing the employees from the organization.
Yes.
So normally they have to give some 6 months or 3 months notice. Before giving that, if they have been removed, compensation has to be paid for the loss of employment. So that all will come under profits in lieu of salary. Means instead of salary, that is being paid. So these are the few things that you have to memorize it. Next comes provident fund. Why this provident funds actually has been discussed here. If you just remember in our format.
Profit in salary is exempted, madam, or taxable?
No, it is taxable. Instead of salary, they are being paid that one. Na? Instead of salary, something has been paid, but we are not getting specifically as name as salary.
Okay.
So if you can just look at here. What we were discussing. Yeah, provident. See, employer's contribution to RPF in excess of prescribed limit. RPF means recognized provident fund. So under salary, this will fall. Actually, here we have discussed the percentage, but actually provident funds, we have different types like statutory provident fund, public provident fund, unrecognized provident fund, and recognized provident fund. So that point has been given separately to us here. So statutory
Madam,
provident
send this
fund
all
normally,
detail to us, ma'am.
Means I didn't get you.
Send this all detail to us, ma'am. In the group, I had given the number to you.
Video or notes? Video or notes?
Notes, ma'am.
Yeah, okay. I think it's available in your textbook itself. It's okay. I'll send it. I'll send it.
Your lesson is exactly in the book.
Sir?
You told the syllabus is exactly in that book, madam. Recent book, taxation.
It is as it is?
Yeah, as it is. As it is there.
Yeah. Okay. Yeah. Okay. Yes. Yes. So next we have types of provident fund. Under provident fund, we have 4 types. That is statutory provident fund. Normally we call it as GPS, like GPF for government employees. It will be done. The two who are having pension, for them it is there. And whenever you do get this statutory provident fund, it is fully exempted. It is a tax free. We can call it as. Next we have recognized provident fund. Here under recognized provident fund, employer will be contributing and employee will be contributing. That is nothing but CPS, Central Pension Scheme or National Pension Scheme nowadays we call. Means after 2004, there is no pension for the government employees. So for them, they will have a recognized provident fund under which employer will be contributing. Similarly, employee will be contributing. Both will be contributing together. How much they are contributing depends upon the salary and the rules. But it should be up to 12% only. It is tax free. Only up to 12% of salary is tax free. For example, an employee is contributing 13% and even government is also, employer is also contributing 13%. But what extent it is exempt to 12% only. Remaining that 1% extra is taxable. This is normal contribution. For every contribution means nothing but saving of our amount. Wherever they will save in some other companies, on that saving, you'll get some interest. That interest is also exempt. To what extent? To the extent of 9.5%. To the extent of 9.5% is exempt. Whatever you are saving on that 12%, that to whose contribution? As an employee, my own salary, I can contribute how much, whatever amount I want to contribute. But employer should contribute only 12% only. If he's contributing extra more than 12%, that extra will be taxable. And whatever saving it is done by the government or by my employer, on that amount, if interest is, should get only 9.5%. Till 9.5%, it is tax free. If I'm getting more than 9.5% of interest, in that case, whatever extra has been receiving, that is taxable again. So this is what recognized provident fund point has to be remembered. Next comes the unrecognized provident fund. And this is done by the private employers. And any fund which is not recognized by the government or recognized by the commissioner is called unrecognized provident fund. And whatever interest you are receiving, that can be shown as under 80C. And normally does not qualify. It will not come under any deduction also. Only whenever total amount is taken, at that time it will be taxable. That's it. Next, public provident fund. And under this scheme, minors also can open and with a minimum of 500 rupees and maximum of 70,000. And it is deductible under section 80C. And interest is also tax free. It is. So this is what they given. Employees contribution, interest credited and a refund. So this has to be memorized. And the meaning, different meanings. Deductions, we have 3 deductions in our format. As I said, standard edition is not 40,000. Presently it is 50,000. You can just rectify it in your textbook. If it is updated, it's okay, no problem. So standard deduction is 50,000. Okay. And entertainment allowance, for entertainment allowance, it is applicable only to the government employees. We will provide this deduction if the employee is a government employee. If it's a private employee, they'll not get any deduction at all. Okay. They'll not get any deduction at all here. They will only taxable under allowances. But for example, if it's a government employee and is receiving entertainment allowance, in that case, what we will do, first we will write in allowances, under head allowances, we will write there total amount, whatever they're receiving. After that, we will show under deduction. How to deduct? 5,000 rupees, 20% of basic salary or actual allowance received. For example, towards entertainment allowance, if I am a government employee, I am receiving some 10,000 per annum. Per annum, if I am receiving 10,000, what I'll do this, first I will write in salaries there, the second head allowances, there I will write first 10,000, I will add it and I'll get gross salary. Then under deductions, I will write entertainment allowance. How much it is exempted? These 3 rules. Out of these 3, whichever is the least one. Okay. That is exempted. Rupees 5,000 or 20% of salary, or it is also called as 1/5 of salary, 1/5, or actual allowance received. Out of this, whichever is least, that will be given as deduction. Amma, yes, please. Yes,
Madam,
sir.
it's means
Hello?
20% on basic salary, ma'am. We have to deduct 20% on basic salary.
Yeah, it's on basic salary.
Basic salary.
Percent on basic
So-
salary. Percent will
so
calculate. We'll calculate it.
It can be very less if it is
Yeah.
on
Out
basic
of this
salary.
three, which it can be, yeah, mostly it will be 5,000 only normally.
Okay. Okay.
Normally, the least one will be 5,000 only, in maximum cases.
Okay, ma'am.
So out of these three, whichever is least, that will be deducted under deductions, that is section subsection 2. And then comes the last deduction, that is professional tax or entertainment tax or professional tax. And this will be like whatever amount, the tax amount is paid by an employee every month, that will be deducted here. So when you deduct all these three deductions, you'll get income from salary. Any doubts, sir, here in the income from salary? If you have any doubts, you can just ask me.
Madam, if we practice some more problems, then we can be. Yeah.
Yes, that's right, sir.
Because according to the situation, we have to take the decisions and the calculations also.
Yeah, yes, you are right, sir. So sir, tomorrow means on the next class, we'll just try to complete income from house property, income from business and profession, and try to complete the block 1 so that we can go to the other blocks. Okay, sir?
Madam, actually, any
sir.
question got an examination, madam? Salaries, definitely.
Sir,
Question paper pattern, how the topics.
That we'll discuss in the last session, sir.
Okay, thank you.
Okay, ma'am. Please send this,
we'll
ma'am.
Discuss in the last session, sir, that about the pattern and yeah.
Till today, what we learned, ma'am, just send this one to me in the group. Just send.
Yeah, sure. Yeah, surely, sir. I'll send it.
Okay, thank you very much, ma'am.
Thank you.
Welcome.